So most people think that you need to have millions in the bank to buy a business, but you don't. In fact, the Small Business Administration, their loans are how a lot of normal folks like us actually can buy businesses.
But exactly what is the SBA and what are SBA loans? How do SBA loans differ from regular bank loans? And how do you qualify for one?
Yeah, we're going to get into all of that, but let me tell you a little bit about the scale. In 2023 alone, the SBA guaranteed over 27 billion in loans for small businesses. By the end of this video, you're going to know a ton more about how SBA loans work and whether or not they can work for you. Hey, we're Doug and Amber, and
Hello.
today we're here to figure out
SBA loans.
after over 20 years earning our keep in corporate, we need something new, a pivot to shake things up and try something totally different, working for ourselves.
But we don't have trust funds or millions in the bank.
We just believe we can figure it out.
Right. But we're not experts. So if you're about to make any actual big decisions, talk to someone with actual credentials first.
We're just two people trying to forge a new path, so let's figure it out.
Let's do it.
So the SBA stands for the U.S. Small Business Administration. They offer a boatload of resources for entrepreneurs and small businesses in the U.S. They have local offices, they have other resource groups that they fund, and they can be a fountain of knowledge for entrepreneurs or small business owners.
Right. SBA district offices can provide you with in-person, online, or telephone assistance. SBA's network of resource partners throughout the country is also available to help starting small businesses and running small businesses.
Yeah, but the biggest thing I think most people know them for are the SBA loans.
For sure.
But they don't lend you money directly. Instead, they guarantee part of your loan with a bank. That guarantee makes those banks more willing to take a risk on small businesses.
Right. Think of the SBA as a cosigner. In short, you're still dealing with the bank, but the SBA helps reduce their risk.
Yeah. And here's the big difference. A regular bank loan is based really only on your personal credit and collateral. They'll usually want you to have major assets on the line.
An SBA loan, on the other hand, looks at both the business and your personal finances. If the business has a strong enough cash flow and a good history, you've got a good shot, even if you don't have millions in the bank.
Right. Unless you've got a spare mansion lying around to pledge as collateral. And if you do, you're probably not watching this video.
And if you do, can we borrow your pool house?
I'm a very good cook.
True. So if you had to choose, would you rather put your house on the line or bet on the cash flow of the business? Tell us in the comments below. So the SBA lends to people starting a small business or buying a business or investing into the business that they already have.
For today, we're mostly going to talk about what's called an SBA 7A loan, which is what most people buying a business will need. So if you're buying a smaller business, you might qualify for what's called an SBA Express or an SBA microloan. I'll drop the link in the description so that you can do more research on the SBA website. But the SBA 7A loan is essentially up to $5 million maximum, about 10 to 20% down required, and interest rates tend to be around 2.75 to 3% above prime. The repayment term tends to be about 10 years unless there's real estate in the deal too, which can go up to 25 years.
Right. For funding speed, think 45 to 90 days. So patience will be required.
Basically, the Small Business Association is the USPS of financing. You'll get it eventually, but don't hold your breath. So some banks are SBA preferred lenders. That means they can approve loans in-house rather than sending everything back to the SBA for extra review. So for you, that means faster, smoother process.
Right. If you can, always lean toward the preferred lenders. Ask your bank directly, are you an SBA preferred lender? If they hesitate, well, that's your answer.
Basically, don't swipe right on a maybe.
Hey, what do you know about swiping?
I know things. I got single friends. But not all SBA lenders, even preferred ones, understand entrepreneurship through acquisition. It's, buying a business instead of starting one is different. Some banks are just more ETA friendly because they have more experience and they know what the deal should look like.
Right. Some banks you might consider are Huntington Bank, Live Oak Bank, Byline Bank, Fountainhead, Newtek, Celtic, Dogwood State Bank, South State, First Bank of the Lake.
These lenders have funded searchers like us before, and so they know we're not the typical borrower, and they understand that whole buying a business model. I spoke at length with a banker from Huntington, and he provided me tons of wisdom about buying businesses because he has a long history of these deals. He's seen what's worked and what's gone wrong, and he was great. I highly recommend Huntington based on my initial contact. I'll drop their link for you. Not sponsored, just a fan. In fact, the banker was so helpful from Huntington that I almost asked him to sign for a car loan. To get approved for an SBA loan, you and the business have to qualify. For you, think tax returns, financial statements, and resume. For the business, tax returns, profit and loss statements, balance sheet, and a debt schedule, which is essentially how much money do they owe to who and when.
Right, but here's the trap. A lot of sellers minimize their profits when reporting tax returns to save on taxes, and that can kill your loan approval, even if the SD income looks strong.
Yeah, so the translation here for you is always ask for tax returns early so you know if they don't support the loan. You're going to need to figure that out. You're going to need seller financing or a different deal. Okay, so how do lenders actually decide if you qualify for a loan? This is what the SBA looks for, the 5 C's of credit: character, conditions, capacity, capital, and collateral. So let me tell you a little bit about each one of these because this is what the SBA looks for when deciding whether or not to offer a small business loan. The first one's character. Basically, it's your credit score plus your story. How do you pay your bills? Do you have experience running something or at least a resume that says you could? It's their way of asking, like, how can we trust this person? Can we trust this person? The next one is conditions. That really refers to the market conditions. So, what's happening in the economy? And is the industry that you want to go in healthy? Is competition brutal and it's a really saturated market? Here's where a solid business plan really comes in. This is why you explain why your business has the right to win and gives lenders your story about what your plan is to make sure that your business pays its loan. This is why it's pretty good actually to buy a business rather than start one, is because one of the biggest condition elements that you can bring here is the history of the actual business itself rather than your predictions and forecasts about a business you're trying to launch from scratch. New businesses just don't have the luxury of that history. The next one is capacity. Excuse me, capacity. This measures if cash flow can handle both of what you owe and how much you need to spend to keep the business running. They call this the debt to income ratio, which basically compares how much you have coming in. So, what's your revenue every month? And then how much you have to spend to make that revenue, i.e., your expenses, supplies, inventory, labor, rent, dot, 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 and they compare that to how much you owe. And that owe includes what they think the business loan is going to actually look at. They call this the debt to income ratio. And so the lower that debt to income ratio is, the more likely you are to qualify for that loan. The next one is capital. And that just basically means what are you bringing to the table? What's your investment? So if the business costs $2 million, if you bring $2 to the table, that is not enough, right? So generally they say this needs to be 10, or some bankers are telling me the actuality is more like 20% of the overall cost of the new investment. Generally, the more capital you bring to the table, the better the rates and terms you'll qualify for, and then ultimately also the bigger business you can buy. The next one is collateral. This is what secures the loan. It's the backup plan. If things go south, what can the bank grab to get their money back? This could be your house. It could be the business itself. If you buy a business with real estate in the deal, this can help. If it has equipment that can be sold, inventory that can be sold, then that will be part of the collateral. Of course, these businesses, they cost more. So there's a fine line. Also, if there are other business assets, that you use up, then, they take that into account as what the collateral is and whether or not it's long-term collateral, short-term collateral, etc. Finally, that brings us to the overall look at the 5 C's of credit. So now you know a little bit more about character, conditions, capacity, capital, and collateral.
So basically, your score, your story, your money, and yourself.
Which is basically how I shop at Costco.
And family gifts or equity investors are also allowed. They can help show strength without complicating the loan too much. Which of these C's do you think would be your strongest? Which one makes you nervous? I know which one makes me nervous. Credit, cash flow, collateral.
Oh, stop. Just drop your answer below on how you feel about it. We're pretty curious.
I'm curious.
You can get pre-approved by the SBA as a buyer. The banker that I talked to from Huntington clarified that the required documents really fall into 2 categories, like we said before: personal documents for SBA pre-approval and the business deal documents for the target acquisition. For your personal documents, you really need your tax returns for the last few years. You need a personal financial statement, which is a pretty prescriptive form that the bank will give you. And then you need your resume. We're going to talk about why your resume matters in a few minutes. But essentially, these documents allow your bank to pre-approve you as a buyer so that they know you're not going to be the reason or the obstacle to closing or getting approval. Now, it doesn't mean that every business you want to buy is going to qualify. That business also has to meet SBA approval standards. It just really means that it makes you a stronger a stronger buyer for the seller and the broker, because they know that the deal's not going to collapse because you can't get financing. So here's a big question. What if you don't have the perfect application? Like if you quit your corporate job to do this search full time, does that matter?
Well, every situation's different, which is why it's smart. Start talking to experts early on and make a plan. SBA lenders will run a global cash flow test. They look for both the business and they look at your household finances for any red flags, like not having current income could be a red flag.
Yeah. But what can be helpful is a history of high earnings, your capital contribution, showing that you have enough liquidity for living expenses or maybe some spousal income. But beyond that, there are other workarounds for most problems you might encounter.
Right. For example, seller financing gives lenders a lot more confidence. And even a small income on the side, like a few $1,000s a month from consulting or a part-time job, can help show you have stability.
Yeah. And of course, some ETA-friendly lenders are frankly pretty used to this. They know searchers often have to leave their full-time job to focus on an acquisition.
Right. So I'd say if you have a challenge to navigate, like you're between jobs, don't ever try and hide it. Be upfront with lenders early on. You'll avoid any sudden roadblocks or headaches along the way.
And don't forget, banks want your business, period. Find a good banker and they're going to try to help you find solutions as long as you're open with them from the get-go.
So would you feel comfortable taking on a loan while you're still between jobs? Are we a little crazy maybe? Drop it in the comments below. We'd love to hear what you think.
Another thing that the SBA wants to know is, can you actually run the business you want to buy? Do you have the education? Do you have the experience that translates to the business you're hoping to run?
Yeah, for sure. For instance, Amber and I are interested in a few industries that we don't have direct experience working in.
And if you haven't seen our video where we actually talk about the process that we went through of narrowing down the types of businesses that we're targeting, we'll link it in the notes for reference.
Now, if you don't have deep industry experience that matches your target business, there are some ways to help bridge the gap.
Told you there's always a way.
There's always a way. But there's a few ideas we can share. One, you can have the seller agree to stick around to train you. This can happen in a few ways. You can buy most of the business instead of buying the whole thing. Say the seller retains 20% ownership for some specified number of years. And then when things are solid, you can have it in your contract that you reserve the right to buy them out. Or maybe the seller sticks around for the first 90 days only, but then goes into a consulting agreement with you for the next 12 months. All this is just to ensure that you have the proper training and the proper backup that you need. Or another idea is the seller can guarantee part of your loan. So the bank feels like they have a vested interest to ensure that you're properly trained and that you want to protect the bank's investment. Or you can give experienced employee or a key manager who already works for the company a little bit of the equity in the business to stick around and teach you the ropes. After some number of years, again, you can reserve the right to buy them out and make that structure part of your deal.
Yeah. Just make sure whatever you do here, you have a good lawyer who can help you structure those deals in a way that works for you.
So the important thing is that any one of these options gives the lender more confidence that you won't be flying blind, and it helps get your loan approved.
Yeah, basically anything that proves you're not going to burn the place down on week one.
Though some weeks that might feel like a stretch goal.
No, that's working in corporate.
So that's the basics of SBA loans in plain English, what it is, how it works, and what lenders are looking for.
Yeah, and we're figuring all this out as we go. This is just the very beginning. Speaking of, we're also a small channel figuring out YouTube as we go. Your likes help us keep going and help other people find this video. Also, subscribe to see more. And if you have any suggestions or thoughts, let us know. We'll try to bring them into a future video.
Darn right. And remember, if we can figure it out,
You can too.
thanks.
Bye.
Bye.